What's going on, everybody? This is Phil from Millennial Money Gains, and welcome back to a brand new video. In today's video, we are going to be doing a stock analysis on a stock I just added to the portfolio. Now, this is part of my dividend portfolio. So this is a dividend play, but it's more of a dividend growth play, looking for higher returns on the portfolio. But enough talk. Let's get started. Before we hop right into it, if you guys can, just please make sure you smash that like button for the YouTube algorithm. It really does help out the channel in more ways than one, and I really do appreciate it. Also, if you want to join the family, make sure you hit that subscribe button down below. I post here at least 2 times per week, and there is a bunch of investing videos or trading videos, just videos in general, such as this one. So make sure you hit that subscribe button down below. I really do appreciate it, and welcome to anyone that does. So, the stock I will be talking about today that I just added to the dividend portfolio is Apple. Ticker symbol is AAPL. Now, Apple is a long-term growth play. They pay a very small dividend. We will get into exact numbers later, but they do pay a very small dividend, but it is more of a dividend growth play that I hope will be compounding my portfolio for years on years. Now, I did only add a small position to this one, a very small position, just a starter's position of only 2 shares, but I will be looking to add to this one on a regular basis. And we are going to go right into it, and I tell you exactly why I look to be adding this one to my portfolio, especially on this upcoming dip. This dip has been a huge advantage for me that I plan to take advantage of and definitely add more shares to. But let's get right into Apple and learn a little bit more about the company. Everyone knows who Apple is, but let's hop right into it and just do a quick, brief overview of Apple. Now, Apple is an American multinational technology company that specializes in consumer technology, computer software, and online services. Apple is the world's largest technology company by revenue, and since January 2021, the world's most valuable company in the world. Now, it has over a $2 trillion valuation, and we are going to get into exactly why. This one is trading at a premium, but you do have to pay a little more for a stock such as Apple. Now, they have many avenues of revenue, such as their app store, their electronics that they sell between the iPad, the iPhone, which I believe is probably the most popular phone globally. They sell the Apple Watch. AirPods is a newly formed revenue stream, relatively newly formed, and it has just been growing exponentially. Now, they also do have services such as the Apple TV streaming company. So this is a powerful brand with many different revenue streams under its belt. So Apple is currently trading at $141.04 at the time I am recording this video, and it seems to be trading at a decent discount. It is down about 5% in the past month. In the past year, it is up on the year. It is up about 14% still on the year. The past 5 years, Apple is up 382%. In the past 10 years, Apple is up a whopping almost 1,000% at 885%, and this one does not seem to be slowing down. So let's hop right in and check out their dividend, because that is one of the main reasons I invested in them. Obviously, they do pay a small dividend, but just the compounding effect by holding them for many, many years, they do have the ability to grow their dividend, and as larger they become of a company, they are going to have to be doing something with that cash, which I believe they will be growing their dividend. So they do pay just a 0.62% dividend yield right now, which is an 88-cent annual payout per share. They have a very, very small payout ratio of just under 16%, sitting at 15.76%. They have a 5-year dividend growth rate of 9.30%, and that means they are growing their dividend on average by over 9% every single year. and they have dividend growth for the past 9 years. So they do pay a quarterly dividend. Like I said, it is a small one, but you are investing for the growth of Apple and the future of Apple for them to potentially grow their dividend. Now, obviously, nothing is guaranteed, but they have a very huge revenue, which we will hop right into after this and see exactly what their numbers are. But they have huge revenue, which will continue to grow and grow their dividend over the next 10, 15, 20, 30 years while I am investing in them. And I continue and will continue to add on every single dip that I can, because this is such a strong company. So Apple does have a market cap of $2.3 trillion, making them the largest company in the world globally. They have a PE ratio of about 27.7. Now, this is higher than I usually like to go. I usually like to keep it below 20. But for such a valuable company, you are going to have to pay a little bit of a premium. They have a price to cash flow of about 22.4, which again is a little higher than I like to go. But this is such a solid company. I do believe that you will have to pay a little bit of a premium for them unless you get in at the exact perfect time. But it is impossible to time the market, no matter what anyone says. Time in the market beats timing the market. They have a price to book ratio of about 36, which again is a bit high. They have total revenue of $347 billion with revenue growth of 26.77% year over year. Now, that is a huge number for the size of this company, that they are still growing by 26% year over year. And that just comes from their amazing products that they keep coming out with and their different services that everyone is willing to pay for, because they are such a great company that everyone, or a lot of people, believe in. But there are people waiting online for days just to get the new iPhone that just came out, and that is why I am investing in them personally. I personally do not own an iPhone, but I see the craze about it, and I see everyone going to grab it, and that just screams revenue for the company. So they have free cash flow of $80 billion, so that dividend is safe and definitely potential there to grow. That dividend will be growing for years on years. As long as they have nothing to do with that extra money, they are going to pump it back to the shareholders and give it in a form of a dividend. And I will gladly take that and take the rise in pay every single year that they do. Now, I did get a comment from one of my subscribers, which I really do appreciate, about a stock analysis on ticker symbol EVRI. Now, I do plan on doing a stock analysis on this stock in my next video. I'm sorry I couldn't get to it this video, but I definitely will be getting to it next video. So make sure you stay on the look for that, Danny. I do appreciate your comment. And if anyone else has any stocks that they want to see, just drop them down below in the comment section. I promise I will get to them. I am still a small channel, and I really do read every single comment that I get and respond to all of them and make sure that I definitely get to your comment and make sure I answer it fully. So I really do appreciate that, Danny. And also, let me know what you guys think of Apple. Obviously, this is a huge company. Everyone knows who Apple is and what Apple does. But let me know what you guys think of them as in terms of investing in them. Do you think it's a good time to? Do you think you should wait? Let me know down in the comments. I appreciate all of you for watching, and I will see you in the next video. Peace!